Good afternoon. This is Ken Long from Tortoise Capital on the afternoon of August 15th, 2009. I want to take a quick look at Pepsi, which is a 8-day down setup. Let's take a look at what we have here. So we have Pepsi Cola made a high of 59.5, and then 1, 2, 3, 4, 5, 6, 7, 8 days down, finishing up with a doji and finding support at 56. So let's take a look at that frame like this, and we got interested in it right about here on a 5-day down. Never got a entry, taken out yesterday's highest high, so now we're right here. So we would draw our stop at 56. We'd make a target of 59.5. That's 3.5 points. So if we keep the 2-to-1 reward to risk ratio, that means we could have as much as $1.20 on the downside and still have $2.40 on the upside, meaning we could buy this as high as $57.20 or right about here, and still have an easy to see 2-to-1. So we're looking for an entry at about the green line, a little bit north of 57. And generally speaking, any price that we see north of 57, we're going to treat that as we want to be long, so we're going to call that the green zone. Any price action that we see between 57 and 56, in other words, within yesterday's price range, that's still an indecision. The price has not voted in one direction or the other, and so if we're in the yellow zone, if we decide to go long or short, we've got to be able to see a 2-to-1 reward to risk ratio just on testing the boundaries of the yellow. So let's say it gapped down to on Monday around 56, and then we saw tactical momentum going north. We could still buy that at less than 56.3 with a target of 57 and still have our 2-to-1 inside the yellow zone. Then if it hesitated around 57, we could cash our 2R win. But if it blasted through there, well, then we'll be into the green zone. We'll be looking to add more, and we would have gotten a superb first entry. So in the yellow zone, you can still trade it if you have tactical momentum and you can see 2-to-1 inside that zone. And then, of course, anything where it fails at 56, it'll probably fail through 55.5, and then from then on, it's Katie bar the door. The next place that you see any support at all would be around 54.5 or so, like right there. Overall, I do like what I see in Pepsi with this generally upward channel ever since the breakout early in June. So if we looked at it this way, we can see how it's testing this upward channel, and we're right at a boundary here. So we've got some technical support at 55.5 from the rising 50-day moving average. We've got the double bottom put in here by these two dojis at 56. The market has been sideways for the last week or so. Pepsi has been weaker than the overall market, but it did show some signs of stability here yesterday while the market sold off. So it may be that Pepsi is turning the corner faster than SPY. I like that Pepsi is on the Williams percent R10 is in oversold conditions, meaning this has been an exaggerated sell-off. And so there's lots of value reasons to like Pepsi right here. So that's the 8-day down pattern and frame inside Pepsi, and I like that for Monday on my short list. So thanks for your attention.